You're watching Silver News Daily. Like this video and subscribe to the channel for the best news that you don't want to miss. Now let's get straight to it.
And I think you have to kind of take a step back and see what the biggest players in the world are doing. And the biggest players are the central banks who are massively de-dollarizing and buying commodities. And I think that's kind of the thrust that fits hand in glove what Zoltan Pozsar said. We are heading into a new era based on commodities and transparency, not opaque debt instruments and promises that seem to fall short. And I just think that this is something that will be a very, very...
Imagine a world where the glimmer of gold isn't just a symbol of wealth, but a beacon of a new financial era. This isn't a scene from a movie. It's the unfolding reality of 2024. Welcome viewers to a journey into the heart of the next big gold rush. A rush so immense, it's about to redefine the very fabric of global finance. As we stand on the brink of 2024, whispers in the financial corridors are getting louder. The phrase the 2024 gold rush is right around the corner as key global players are set to go all in on gold is not just a speculation anymore. It's becoming a prophecy waiting to be fulfilled. And here's why. The Federal Reserve, the central bank that governs the pulse of the world's largest economy, is steering the ship towards uncharted waters. With anticipated rate cuts, a decision that's sending ripples across the globe, the value of the dollar is poised to shift. And in this shift, gold, the eternal emblem of stability, is witnessing a resurgence like never before. But why gold, you ask? Why now? It's the perfect storm. A convergence of economic and geopolitical forces that are aligning to create a scenario where gold isn't just a safe haven, but a strategic asset. Middle Eastern tensions, escalating uncertainties, and the global shift towards tangible assets are painting a new picture for gold's role in the future economy. As you stay tuned, we'll dive deeper into these waters. We're not just exploring the what and how of this impending gold rush, we're unraveling the why. Why are the world's financial titans turning their gaze to this precious metal? Why is 2024 set to be a landmark year in the history of gold? So, subscribe now and don't miss a moment of this extraordinary journey. Together, we will uncover the secrets behind this golden phenomenon. As we peel back the layers of this story, remember every piece of information is a golden nugget, leading us closer to understanding the full magnitude of what's coming in 2024. Stay with us as we embark on this exciting exploration into the future of gold. In our first chapter of this golden saga, we turn our eyes to the pivotal role of the Federal Reserve and its impending decision that's set to spark the 2024 gold rush. This isn't just about a shift in monetary policy. It's about a seismic shift in the global financial landscape. When the Fed speaks, the world listens. And now it's hinting at a move that's almost unheard of in recent times: rate cuts. Yes, you heard that right. In a world where we become accustomed to the tightening of monetary policies, the Fed is poised to take a different turn. But why is this significant for gold? Here's the crux. Rate cuts typically weaken the dollar, and as the dollar wavers, gold shines brighter. It's not just a shift. It's a dramatic reversal of the financial tides. This isn't just a mere speculation. The data speaks for itself. The CME FedWatch tool, a barometer of market expectations, is currently indicating an 86% probability of these rate cuts starting from March 2024. This is huge. It's a signal that's igniting interest in gold among investors worldwide. Why? Because when the dollar loses its edge, gold becomes a sanctuary for those seeking stability and value. But there's more to this story. It's not just about the actions of the Federal Reserve. It's about how these actions resonate across the globe. In an interconnected world, a shift in the U.S. financial policy can ripple out, influencing markets and economies far and wide. It's a domino effect where one move can set off a chain reaction, and in this case, a reaction is a surge in gold's allure. Now, as we navigate through this narrative, we invite you to join the conversation. What are your thoughts on this impending shift? Do you see gold as the future of financial stability? Share your views, engage with fellow viewers, and let's start a dialogue right here in the comments. And remember, while we delve into these insights, don't forget to hit that subscribe button. Stay with us as we continue to unravel the layers of this fascinating story. Up next, we'll explore how geopolitical tensions are adding fuel to gold's fire, further cementing its position as a safe haven asset in times of uncertainty. Stay tuned as we journey through the buildup to the apex of the 2024 gold rush. As we delve further into our exploration of the 2024 gold rush, we now turn our focus to a crucial catalyst in this narrative: the escalating geopolitical tensions in the Middle East. This is where gold's story takes an even more dramatic turn, elevating its status from just a precious metal to a beacon of safety in turbulent times.
We have a list, and I'm just gonna touch on them, and I've prepared for maybe another interview what each one of these countries has to offer. But I'm going to run through the list of the 20 known applicants to BRICS. Another 20 have formally applied, and they are as follows: Afghanistan, Algeria, Bangladesh, Bolivia, Cuba, Ecuador, Indonesia, Kazakhstan, Mongolia, Nicaragua, Nigeria, Pakistan, Senegal, Sri Lanka, Sudan, Thailand, Turkey, Uruguay, Uzbekistan, and Venezuela. Now, the common theme to all of these countries, by and large, is natural resources. Many of them are untapped. Lots of them are very natural resource rich, or offer also key shipping and transport lines or routes. And the term logarithmic decay applies here too. Little by little by little by little. Many of these countries in and of themselves wouldn't amount to much, like Venezuela, right? They have the world's largest known oil reserves, the largest in the world. And so when you talk about these countries that are all signing on, there's another 20 that we're not sure of yet that have informally applied. Heck, by next summer, you could see as many 40 applicants or more to the BRICS and gaining massive critical mass, or adoption, as the crypto space likes to call it. And that's when I think you'll see a greater likelihood of big changes, like a common settlement currency being discussed when you have a massive adoption. So just touching on the BRICS for a moment, and that's one thing I wanted to chat about. I think it's very relevant. The only other thing that I'll mention regarding other countries is we've talked a lot about countries buying copious amounts of gold. Central banks, the most well-informed traders on the globe, are buying copious amounts of gold, and we know that. And so, the most gold that the central banks have ever bought over the last 2 years. But one thing that we're not talking enough about is silver, and I'll just use India as an example. We know India bought 304 million ounces of silver last year, a huge amount. Well, they bought 60 million ounces in October and 20 million ounces in November, and that's just what we know about. The country of India has bought nearly 400 million ounces of silver in the last 2 years. The legitimacy of what these countries are doing should not be overlooked, and it's serious. And again, if all we do is look at price and listen to the Western media, we will ignore all of this. But I just want people to know that this is why people are missing so much of what's happening, because the media is not telling us what's happening over there. That's what I'm focused on, and troubled more so maybe by what's happening here. But you put the two together and it becomes very serious. And so I think as 2024 is upon us, my main focus will continue to be what's happening over there, but never losing sight of what's happening here, and putting them together in a context where they all start to make sense, I think is something that I look forward to doing, but something that hopefully we can wake up some people's eyes who are very well read.
Let's paint the picture here. The Middle East, a region already brimming with complexities, has recently witnessed a significant uptick in geopolitical unrest. We're talking about events like the recent naval clash in the Red Sea involving US forces and Iran-backed militants. Such incidents aren't just isolated events, they're potent signals that send shockwaves through the global financial markets. In times of such geopolitical turmoil, where do investors turn? The answer lies in the timeless allure of gold. Gold isn't just a commodity, it's a sanctuary. It's where investors seek refuge when the geopolitical landscape gets shaky. This isn't conjecture, it's a pattern we've seen time and again. As tensions rise, so does the appeal of gold, making it a safe haven asset that stands firm amidst the storms of uncertainty. But why is gold so uniquely positioned in these scenarios? It's because gold transcends the usual financial parameters. It's not just another asset, it's a symbol of stability and trust. In a world where uncertainty is the only certainty, gold provides a sense of security that's hard to find elsewhere. This is why, as the Middle East tensions heighten, we're seeing a corresponding spike in gold's appeal. It's not just about the value of the metal, it's about what it represents in times of crisis. As we continue this journey, it's essential to keep an eye on these unfolding events. How will the ongoing tensions impact the global financial markets? And more importantly, how will they shape the future of gold as we head towards 2024? These are questions that deserve our attention, and we'll be exploring them in depth in our upcoming segments. And as we navigate these complex waters, we remind you to subscribe to our channel. Stay informed, stay engaged, and let's continue this fascinating exploration together. Up next, we'll shift our gaze to the broader global financial landscape and how central banks are turning towards commodities like gold, signaling a major shift in the global financial paradigm. The story of the 2024 gold rush is just heating up, so stay tuned. We now transition to a broader perspective in our exploration of the 2024 gold rush, where we witness a monumental shift in the global financial landscape. This part of our story takes us beyond individual policies or geopolitical events, diving into a global trend that's reshaping the very foundation of financial systems: the increasing focus on commodities, particularly gold, by central banks around the world. The global financial arena is witnessing a tectonic shift. Central banks, the titans of the financial world, are gradually moving away from their traditional reliance on the dollar. There's a growing inclination towards commodities, and gold is at the forefront of this movement. This isn't just a diversification strategy. It's a profound change in the way these financial giants perceive value and stability. But why this shift towards gold? It's about more than just economics. It's about a quest for a more transparent, tangible form of wealth. In a world where debt instruments have often been cloaked in opacity, gold stands out as a clear, unequivocal asset. It's a move towards a new era that values solidity and transparency over the often murky waters of financial instruments. This trend is not happening in isolation. It's a part of a larger narrative that involves major global players. Take, for instance, the actions of the United Arab Emirates in moving away from dollar transactions for oil, or consider the increasing influence of the BRICS nations: Brazil, Russia, India, China, and South Africa, all rich in natural resources and increasingly pivotal in the global financial system. These developments are not just economic decisions, they're signals of a changing world order, where gold is becoming a key player. But it's not just about nations and their central banks. This shift is reflective of a larger awakening, a realization that in times of uncertainty and change, gold offers a semblance of stability and security. As we edge closer to 2024, this realization is becoming more pronounced, with implications that span the globe. So, what does this mean for you, our viewers? It means that as we approach 2024, keeping an eye on these global trends is crucial. Understanding the movements of central banks and the geopolitical shifts that influence them can provide valuable insights into the future of gold and, by extension, the future of global finance. As we continue to unravel the layers of this fascinating story, don't forget to subscribe to our channel. Stay informed and engaged as we delve deeper into the dynamics that are shaping the 2024 gold rush. In our next segment, we'll be looking at how these global shifts are converging to create a perfect storm for gold, setting the stage for a rush unlike any we've seen before. Stay with us as we bring you more insights and analyses in this gripping financial saga.
It'll help accentuate the Fed's desire to cut rates once they see the paper asset bubble rolling over again. They're probably pretty happy right now that the paper assets are hanging in there. Now, what really spooked the Fed, though, in our view, and we said this in about middle of last year before the T-bond market crashed, and that's what it did from like July, August, September, October, meaning yields rose, T-bond prices collapsed. We thought that would spook the Fed. That's one asset that they don't want to see get out of control, become illiquid, go the wrong way. And it certainly wasn't, quote, incremental. You know, they like to do things incrementally, you know, like they're scientists or something. Well, their T-bond market crashed on them. So that says you're not in control of anything. You know, Bruce Willis up in the building, you know, you're not in control of it. I won't say it, but anyway. So I think that's what really spooked them, more than any data point we might want to discuss on financial TV about, you know, 1 decimal point difference here or there. It's the collapse in their T-bond market that put a chill up their backbone and definitely caused them to, behind the scenes, decide, no more rate rises. And we'll put the hint out that we're going to cut too. It's not so much the data points, it's the collapse in that market. Now, since then, what we call the nuke event, before it happened, we also said it would be a V-bottom low, meaning you would get high yields, low price in T-bonds, but when it turned, it would come up like a V-bottom, like some collapsing commodity that finally went too far. You know what I mean? And it did, and I suspect the Fed and the Treasury are in there buying that stuff, along with some large asset managers as well. And this time, justifiably so, because technically, anyway, there was justification for a good counter-trend rally in the T-bonds or drop in yields. And I think we're going to see more of that over the next, let's say, quarter. We're not long-term bullish on bonds, but we do think rates will probably not be a threat and will be a so-called beneficiary to the stock market. The problem is it isn't. Historically, when rates come down, it's because the Fed is what? Concerned about something. And I think there'll be multiple things for them to be concerned about. So anyway, I don't trust the stock market rally here. Our technicals don't trust it. Price has nipped out the high, not on the S&P yet. But you've got to remember that especially the NASDAQ 100 and the S&P 500 are very heavily weighted up front with a handful of symbols. It's not 500 S&P stocks, it's like 5. Explain the entire move. In the NASDAQ 100, it's like 3 or 4 or 5 stocks. Explain 50% of its movement. So keep that in mind. So the picture you see on an S&P chart on NASDAQ is not the true picture